So before we get started, I'd like to briefly introduce the Chinese Chamber of Commerce here in Columbus. We were founded in 2015 as a platform on which people can get to know each other, network, and find opportunities both here in Central Ohio, throughout the US, and throughout the Chinese-speaking world. So thank you for coming in here, because that's what we're doing. Chinese Chamber has 3 expert speakers this morning to talk about commercial real estate in Shanghai, Central Ohio, and Ohio in general. Our first 2 guests are with the global commerce real estate firm CBRE, and our 3rd guest is from Chinese Chamber member JobsOhio. While the speakers speak, please send your questions to me in the chat. I will collect them and ask them after all 3 speakers are done. After Q&A, we will have 2 to 3 sessions of small group virtual networking. Each session will be randomly created, so you'll be put into virtual small rooms with other people, and then after about 10 minutes, the room will close and you'll be randomly assigned to another room to meet new people. Next, I'll introduce all 3 speakers. First, David Goodman. Fluent in Chinese, David has lived and worked in China for more than 15 years and oversees the law firm and banking practice group for CBRE in Shanghai. David is responsible for delivering key office brokerage and advisory services projects in Shanghai. His experience includes new setup, rent reduction, relocation, large phased back office, and regional HQ purchase and lease acquisitions. Prior to joining the Shanghai office services team in 2010, David worked as a regional portfolio and transaction manager in China, working on large projects across different markets. David received a master's degree from Ohio State with a domain specialization focused on real estate and Chinese. Mike Copella is the market leader and managing director of CBRE's Columbus, Ohio operations. In addition to his role in Columbus, he provides executive leadership to CBRE's offices in Cleveland, Cincinnati, Louisville, and Pittsburgh, where he partners with the managing directors in those markets to support their growth. Mr. Copella joined CBRE in 2011 as a vice president in the company's office services group in Columbus. As a brokerage professional, he focused on tenant representation and established a particularly strong position as one of the top real estate professionals serving healthcare clients in Columbus. Mr. Copella is a graduate of the State University of New York at Fredonia and is active in the Columbus community, volunteering often with Meals on Wheels and serving on the boards of Habitat for Humanity Mid-Ohio, the Columbus chapter of Young Presidents Organization, and the Columbus Chamber of Commerce. Impressive. Brendan Murray. Brendan Murray is the Senior Manager of North American Business Development at JobsOhio, with a particular emphasis in leading corporate attraction from the United States and Canada. Brendan's focus in business attraction spans JobsOhio's 9 targeted industries. Prior to coming to JobsOhio, Brendan worked in commercial real estate brokerage and development throughout Central Ohio. His experience spans across complex real estate transactions, site selection, business consultation, and focused research initiatives. Brendan is a Columbus native and moved back to Ohio in 2009. He holds a BA in Communication Studies from West Virginia University and an MBA in Global Management and Finance from Ashland University. So Dave and Mike will lead us off in an introduction to commercial real estate in Shanghai and Central Ohio. Dave, take it away.
Thanks, Pat. Can you hear me okay?
Yep.
Yeah, okay. Oh, great. Well, look, it's a pleasure to be, with the Columbus Chinese community. It's been a while since I've been back to Columbus, but I sure enjoyed my time there. And it's great to be able to talk about the dynamics of the market, in Shanghai and how that, relates to Columbus. So it's great to be with you guys today. With that, Mike, if you'd like to maybe just make a quick introduction, to yourself and about the scope of CBRE.
Sure, happy to. So good morning, everybody. I'm Mike Copella. Here are some of the services that CBRE provides across the globe. We're really broken into 3 divisions, which would be the advisory service division on the bottom, the GWS or the Global Workplace Solutions, and then the real estate investment. And you can see underneath each kind of the different categories and who we service and what business lines are there. David and I are in the advisory services bucket, so that's probably what you probably feel and see the most when you're interacting with CBRE. But we also have development divisions underneath our real estate investment, and our GWS division is our largest as we're interacting with kind of our largest clients, providing both facilities management and transaction management for our clients, really all across the globe. Turn it over to you, David.
Great. Yeah. So before we jump into the Shanghai overview, just a quick overview of CBRE globally. But CBRE, we're the world's largest global real estate provider. So I think we have roughly over 400 offices with over 100,000 employees globally. Within the Greater China region, which includes Hong Kong and Taipei, we basically service the majority of our clients through our main larger offices, 11 offices, but we have 100 satellite offices in cities. Within Greater China, we have our full service arm, which Mike mentioned, A&T, which is essentially, advisory and transactions. But we also have a full scope of GWF services in capital markets. Within Greater China, Shanghai is basically our largest office, and that's where I'm based. I've been based in Shanghai now for close to 12 years. But within Shanghai, we have roughly over a few thousand employees, roughly about 3,000 to 4,000 in Greater China. Mike, maybe just a quick jump on CV in the States.
Yeah, you bet. So this is a snapshot of the coverage that we have in the United States. So 159 offices, really an office in, I would say, almost every single major metropolitan. In Ohio, we have four offices, so Cleveland, Akron, Cincinnati, and Columbus. And in general, in Ohio, we have over 70 professionals and about 1,500 employees just throughout Ohio, servicing everything from small users of commercial real estate to large users like Cardinal Health, Goodyear, Nationwide Insurance, NetJets, and others. So we're really lucky to have some of the strongest clients in Ohio that we provide service to. Great.
Well, again, today we've really broken up the deck into two main discussion points. The first one is on Shanghai, and a quick introduction on the office market, the commercial real estate market, highlights on some of the key dynamics, some of the key areas that we've been advising clients on the trends, and a big topic, which is COVID-19, what we've seen from the government, occupiers, users. So I think after we have a quick discussion on Shanghai, we'll then talk about, Mike will talk about Columbus and what's going on in his region. And then I think at the end, we welcome any questions. So quick introduction on Shanghai. Shanghai is the largest city in China, which many of you probably may know. There's roughly about 25 million people within Shanghai, and it's one of the largest, most developed, commercial real estate markets. Really, the commercial real estate market had started developing from the early 1990s, then really reached peak stock in 2000 and hit critical mass in 2020. But if you look at these pictures, it really shows the justice of how much this city has developed. My first time, or my first arrival in Shanghai was in 2003, so about 17 years ago. And I remember, if you look at the 2002 pick, I remember, Shanghai very much looked like 1990s. The Pearl Tower had just was just completed, and Jinmao, which is an impressive building, it's over 88 stories, was completed, but the entire area of Lujiazui or Xiao Lujiazui was still under development. But again, where we're at today in 2020, Shanghai very much is, the New York, so to say, of China. It's the banking, finance, commercial center of Greater China. In terms of market dynamics, as I mentioned, Shanghai being 25 million people and the largest city in China, the development trends of office and commercial really spun from, Nanjing Xilu and Huahuailu, which those of you who've come here are probably familiar with, then later on to Lujiazui. But there's a lot of the development trend is within the non-core CBD. So in terms of commercial real estate stock, we've really categorized Shanghai in kind of three main areas. The first area being what we call core CBD. So, Nanjing Xilu, Huahuailu, Lujiazui, what we call greater CBD, Xujiahui area, Shiji Dadao, Century Avenue, Hongqiao, Renmin Guanchang, People's Square, and what we call emerging markets. And these are areas, again, emerging markets that we see a lot of development. But to put it in perspective, the total office stock within Shanghai is roughly around 15 million square meters of space. So if you look at one of the submarkets, for example, where our office is located at Nanjing Xilu, it's about 1.1 million square meters. That's roughly around 12 million square foot. Just Nanjing Xilu, which is one of the submarkets within Shanghai, is roughly about the size of the total office stock within, I think, downtown Columbus. So again, Shanghai is a very large dynamic market. In terms of rentals, the average asking rentals have kind of ranged between 8 RMB per square meter per day up to 10. But to put that into U.S. terms, kind of roughly around $50 a square foot an annum, which is a bit higher premium than kind of the average average asking rents for Columbus. But again, some areas in the market, core CBD areas, there's very limited land, and most of that has been developed. The development trends have basically over the last 7 or 8 years after the World Expo have been more focused on non-core areas. So there's a lot of areas under development, and there are also emerging markets. Most of our clients and occupiers, again, whether it's the banks or the major tech companies such as Apple, Google, JP Morgan, Bank of America, there's a high concentration of, banking and finance within Lujiazui, fashion, pharmaceutical, professional services on Nanjing Xilu, and as well as Huahuailu. But there's been a lot of movement and trends and diversification of space and front office, back office from kind of core CBD locations to non-core CBD locations in emerging markets. Over the course of the next 4 years within Shanghai, we're looking at roughly 3 to 4 million square meters more of grade A office to come online. So again, Shanghai right now is in a peak supply trend. And with all these changes to the market, obviously our clients and our occupiers are looking at best of, where they're placing staff, how they're utilizing space, how they're maximizing savings, and there's a lot to consider. In terms of the demand, the largest demand driver in Shanghai is from banking and finance. So over 20% of the demand in Q1, and one of the top 3 demands of a year ago was in banking and finance. But I'm sure some of the members here are caught up on the relaxation of foreign ownership in terms of securities and banking, and the Chinese government's preference to slowly open this up. But we've seen a big growth from our occupier clients within banking and finance. TMT, that's really technology, media. They're a huge occupier in Shanghai. Apple, Google, Amazon, they have major operations, in Shanghai is one of their key hubs within Greater China. Business services, consumer products, pharmaceuticals also make up a huge demand. You know, what's interesting, I think, of working in China and in commercial real estate over the last 15 years is, you know, 10 years ago when within our service company, I'd say about 80–90% of our service focus was servicing multinational companies, you know, in China, acquire space, acquire office, you know, purchase industrial space. But if you look at the demand, you know, 10 years ago, majority of domestic demand from, you know, Chinese domestic companies was less on leasing and more on purchase, ownership, and self-use. But over the course of like the last 3 or 4 years, there's been a huge demand from domestic companies. And today, if you look at you know, the average transaction of office within the market, unlike 10 years ago, it's really dominated by domestic companies. So our client base has grown quite a bit from certainly seeing MNC companies in, you know, in China, in Shanghai, to much more towards you know, servicing domestic companies in China. You know, in terms of key submarkets, again, Shanghai is a huge market, but the decentralized areas are obviously a lot more active than the centralized areas. And the average office size transaction is generally under about 10,000 square foot of space. So, you know, call it a 80 to 100 person size type office. You know, as I mentioned, there's a lot of upcoming upcoming supply in the next 3 to 4 years coming online. But really, where Shanghai is, where we're at now in terms of the vacancy is roughly about 20% across the market. You know, in terms of, you know, is it a tenant's market? Is it a landlord's market? Really in a market where you get above a 10% vacancy, whether it's a market, a submarket, a specific building, it becomes a lot more tenant favorable. And it's really unique because Shanghai, we're in kind of a new era where if you look back from, you know, 2009, you know, up until 2016, it's been a very tight market. It's been a very landlord favorable market. You know, 10 years ago in this market, it was very much developers could build on spec, whereby, you know, they'd acquire a piece of land, they'd build a 40-story office building. There was no requirement from the banks to have a certain level of pre-commitment on that office. It was very easily to get loans and build it, and, you know, build it and they will come. Demand would come, and developers have had it very, you know, very easy up until about 2016, 2017, when all this new peak supply, this higher quality office came online. There was a lot more competition, and obviously vacancy increased. So again, Shanghai is a much more mature market now in 2020, and will be even more mature as we go than it's ever been. But the overall trend has been oversupply, which has been tenant favorable. You know, there's still strong demand, but a lot more supply. You know, rents have been fairly flatlined over the last few years, and we see the trend slowly going down. But you know, it's a very tenant favorable market. Great time to, you know, consider your portfolio and how you use space. A little bit on COVID-19. You know, the COVID impact is it's a big topic in commercial real estate and office, and it's probably a topic that not easily covered in a 5-minute segment. But you know, one of the questions Pat had for our team are, you know, what are we seeing from the government in terms of incentives? How has COVID-19 impacted you know, the commercial real estate? For those that haven't been in China over the last year, it's hard to really explain, but China today is up and opening. I mean, has been up and operating since, you know, mid-March to early April. And I know that our friends in the States, a lot of businesses are still closed and there's social distancing, but I think the impact in China was a lot less than it is across the globe outside of China. What was nice, I was here over Chunjie and Chinese New Year's, with my family. We didn't leave, and China did have a very hard lockdown in late January during Chunjie, and a work from home approach for about 6 weeks. But again, from early March to early April, businesses started to open up. There was a relaxation. You saw retail open up, but a lot of that I have to think comes in credit from the strong central government. Some of the three key areas that the government has supported the overall market, and it doesn't necessarily have strong correlation with commercial real estate, but there's obviously been a huge government support and an interest rate cut, liquidity injections, and physical policies. And just a quick summary, obviously the central government has provided considerable tax breaks, 增值税, VAT tax breaks, as well as IIT, to combat that. There's been a decent amount of relief for corporates and individuals, and more stimulus and investment. In terms of the impact in commercial real estate, commercial real estate is really kind of three key sectors: office, retail, and logistics, or industrial as we call it. But the impacts and the support and the response from developers has been different based on these three asset classes. So one of the most affected in China and in Shanghai had been the retail industry, and I believe that is the same for the U.S. Given the closures, and that the retail business is very much dependent upon foot traffic and sales, restaurants, bars, and these types of areas. We saw a lot of retail tenants actually exit the market. For them, for some of the F&B, food and beverage, losing 1 month or 2 months of foot traffic in revenue is a make or break for that business. So naturally, because some of the retail operators had exited, closed, used force majeure, type language in their contracts to get out of their spaces, we obviously naturally saw landlords be a lot more reactive to provide stimulus and to provide benefits for retail operators. So some of those big key things, if you look at what is widely acceptable, again, in retail, we have seen many owners, shopping malls basically provide big rental holidays and discounts in terms of rental via rent-free, whereby 2 or 3 months of rent they didn't need to pay, and potentially further reduction in rent to ensure that the retail tenants that they had wouldn't leave. We also saw additional fit-out extensions. So for some operations that were in process of construction prior to COVID and after COVID, obviously we saw concessions from landlords to ensure that that they continue to invest and commit to the lease, additional rent-free and late rental payments. In terms of office, which again is one of my key sectors, a lot of our clients had asked me, and I spent nearly 2 months answering a lot of questions and working with developers and clients across the globe on what concessions, but obviously I think was a lot less impacted compared to the retail market. Office demand is really a function of what is your head count, what is your operations head count, and how do you utilize that space? Is it fixed desk or hot desking or ABW, which is the big buzzword in our industry? But what we did not see is we did not see any major clients say, we're looking at cutting 20% of our workforce, or we're looking to terminate an office lease, we're leaving China. We didn't see that. And unlike retail, because of that, naturally, landlords didn't have the direct impact of that. So in terms of rentals or reductions in rentals, whereby an office client is halfway through a lease term, we didn't see any real major concessions. For our office tenants that were in process of moving and their office was under fit out, naturally we saw big concessions from landlords to provide more rent-free or more fit-out period, and we did see a willingness by landlords to provide a more relaxed, delayed payment for those that were having issues in payment. Logistics sector, that was one of the biggest sectors that I think actually benefited from COVID-19, but with the Zhifubao, the Alipay, Taobao, a lot of the online sales, a lot of the logistics properties really benefited from that and really spearheaded, I think, the trends of buying online. But logistics sector was one of the least impacted and one of the sectors that benefited the most. I guess to summarize, and I appreciate we only have about 10 or 15 minutes to talk about Shanghai, but I think the bottom line for China, we've seen a huge support from the central government to support the economy and to support businesses. We've already seen huge rebounds within the economic activity in Q2. Q3 will be a very busy and active quarter, and I think Q4 will be well. So you've seen kind of the V-shaped curve in terms of the overall economic that a lot of the economists are talking about, and China was the first to recover. I think the central government policy will continue to be focused on those big three things that I said earlier, which is physical support, liquidity, and supporting businesses. But we're not. I think the government will continue to be focused on that, ensure that economic activity is high, and they'll continue to discount and provide more liquidity and cheaper loans as they need to support the economy. In terms of commercial real estate, as I pointed out earlier, I think you're going to continue to see a slight downturn, continual rental decrease over the next 1 to 2 years. But that said, I think you're going to see a very active market, and the market is very active at the moment. Many of our office clients are in process of moving or staying or downsizing or restacking or moving from a fixed desk to a more open ABW type workplace. Retail, the overall retail industry is under immense change from large shopping malls to more experience centers for the big brands such as Nike and Adidas, and experience centers, as we say. Industrial, you're going to continue to see big changes as the money moves from going to shopping centers and buying more online. But the market will be changing, and rentals will be downward, but there's a huge supply. In terms of the investment market, again, the investment market activity in Q1 and Q2 was a lot slower than it has been traditionally, but you're going to see a pickup in investment activity, I think, from international investment, foreign funds investing in Chinese commercial real estate, much more, I think, in Q4 and Q1 this year, probably when we get out of the U.S. election. And hopefully as the global response to COVID-19 kind of bottoms out. But overall, very, very positive. So with that, I look forward to any questions the group has. We'll probably answer those towards the end of this, and I'll hand it over to Mike to talk about Columbus, Ohio.
You guys give me 1 second. So David, nice job, very in depth. And I will say it's kind of like highlight to know that Shanghai's or Columbus being shared to Shanghai. So there are definitely some similarities. Certainly some similarities what's happening in the overall industrial market, overall real estate markets, especially the things around retail, which is under a lot of pressure, and then also the things that are happening, the positive trends that are happening in industrial. But I think the office market is the one that I get questioned on the most. I think everybody's trying to understand what does it really look like in the future. So we're going to talk a little bit about that. And I think, unfortunately here, I will say that because we did not have the same type of lockdown, were a lot of us across the country, and especially here in Columbus, we have remained in a very work from home type of environment, which has caused a lot of companies to think about, how they work in the future and should they be working, from home more. Ultimately, I think you'll see just more flexibility as it relates to how companies approach their work environment, but we can talk about that as we kind of dive in. So just an introduction for those of you that don't know a lot about Columbus. So we have a population over 2 million, which is, I think, actually the 14th largest city in the United States that way. And that kind of counts our overall MSA, which is pretty expansive. We've had some pretty good growth rate. Overall, Columbus is a region that continues to grow really well. Our unemployment, that's right now, for a while, it was at a historic low rates, less than 3%. And so if you talk to a lot of employers or tenants or occupiers, it was really challenging up until January or February to find talent, which is one of the reasons we saw a big acceleration in the office space to design really cool, interesting environments for employees to come in. That way they could attract the best talent and retain the best talent. Some fun facts about Columbus. I think one of the things that makes us really unique is we have the 10th highest concentration of millennials in the United States. That's really important for our continued growth. Companies are looking to essentially co-locate next to talent creators like Columbus, because we have a lot of higher education here and a good concentration of younger talent. That's a big thing. And then we actually have 6 Fortune 500 and 10 Fortune 1000 companies headquartered in Columbus. Another actually fun fact is we actually have a lot of retail, and we're a very strong distribution center because of our location, which feeds a lot of our other, some of our office employers as well too. And then to my point about being a talent creator, you can see we actually have 52 colleges and universities within the Central Ohio region, which is, again, one of our overall strengths. So, talking again about the tech piece, this is something that we're really proud of, so we always like to talk about, and we're also highlight some of our notable tech employers. But CBRE just ranked Columbus the essentially the largest small market for tech talent. And if you take a look at what Amazon did, they made an announcement, I think last week, where they're rolling out 6 locations across the Columbus for office, which is kind of bucking the trend of a lot of other major tech employers. They essentially co-located in regions that had notable tech talent or deep benches of tech talent. And so Columbus has that. So I think that's going to bode really well for us into the future. And you can take a look at our total numbers, about 48,000, which is really good for a region of our size. And then some interesting things too is that actually JP Morgan has a really large hub here in Central Ohio. In fact, we're the second largest hub of JP Morgan employees outside of New York City. And then we have like Shanghai, we have a lot of financial services and insurance, which also makes us, a little bit different from some of our other Midwestern peers. And so you guys can take a look at who some of those notable employers are to the right. So talking about specific office space, there's about 38 million square feet in the Central Ohio region. So that includes downtown, that includes places like Dublin and Easton. So really all of the Central Ohio region. We have had a slow start to this year as it relates to it was a slow first quarter, and then a second quarter that was really put on pause by COVID. Overall, our current vacancy rate is about 14%. That's been a rate, as I'll show you here over on the side, has been almost the same rate since 2015. So we have not done as good of a job on our kind of decreasing our vacancy rate as we would like to, but we have added about 4 million square feet of overall office space in that 5-year period. I think the good news is we've seen good rental growth, and so what that means for investors is that they're able to come in and either acquire a property, lease it up, and then find potential sellers out there because of the rental growth. Historically, Columbus was a rental market that was very flat for a very long period of time. But as tenants were demanding new and better space, and new construction was hitting the market, and construction was getting to be more and more expensive, those rental rates have gone up. That's been a really positive thing for our overall market. It has showed up in higher rents on the tenant's balance sheet. But that being said, again, that's part of their strategy to attract and retain the best overall talent. And I think we got to move my screen here for a second so I can show you. But talking about the rental rates, you can see we've gone from 21 to 23, 49 a square foot. I want to call out here that that's when you take into account all of the Class A space in Columbus, but that is a lot of traditional A. And yesterday we were meeting with a large developer to talk about a new project in downtown Columbus, and we're anticipating those rental rates are going to be about $35 a square foot all in. And so we still believe that tenants will pay a premium for the best located, best overall product. And so most of the new product that's been delivered in the last 3 to 4 years have been high 20s and low 30s, but there's just not enough of that product to kind of to move the needle on the overall rental rates. So just doing an overview of the Columbus region, you can take a look at kind of how we break out the different submarkets. Here is downtown, but as you take a look at our overall 38 million square feet, it's all of this. Traditionally, you see a lot of the Class A products starting in Hilliard and working through like the Northern Arc, which would be Dublin, Polaris, New Albany, and Gahanna. Those locations typically have been around where the major employers are, also where there's a lot of residences, and we expect that trend to continue as it relates to the development of office. I'm going to talk about some of the major developments here in a second, but what's been really interesting is you look at areas like New Albany, Westerville, Polaris, and Dublin, and they have done their own kind of mid-market mini downtown developments that are very walkable, that are very dense. So if you talk about Dublin, you're looking at Bridge Park. If you're looking at Polaris, it's Point and Polaris. Westerville is doing a project called Altair, and then New Albany has a market in Maine. And why these are interesting is that they're actually very competitive to downtown because they provide opportunities for walkable retail, Class A office space, and multifamily, as well as parking. And they have positioned themselves closer to some of the decision makers, as well as some of the residences. So it was a really interesting strategy. I think it's actually what the consumer enjoys. That being said, it was a very defensive measure on their part to keep some of their talent and some of their employers from going downtown and getting that kind of that experience in that market. But overall, it's been really good for our market because it's resulted in a lot of new construction, which is a lifted rental rate. So it's healthy, but it has provided competition for our downtown market. And that's kind of we talk about here on the next page here. You can see where rental growth has happened in some of those markets, including Easton, downtown, New Albany, and Polaris. And then here's some of these notable projects that have been delivered. And what I would say is that all of these have some retail integrated into it. I think, we still believe that retail is an important part of it, amenitizing the office space experience. And you can see really everything here has some component of retail outside of this White Castle project, which is their headquarters and also includes some multifamily, but does have some mixed use components inside it. Here's some very notable developments I thought were noteworthy to kind of call out. It also shows kind of some of the diversity of the construction that we've had. So the first one is the North Market Tower. That's still a project that's still in planning. It would be fantastic to see, but it would be a highlight for the Columbus region and certainly something really unique downtown. But integrating kind of one of our kind of like our souls of our city, which would be the North Market, and then including both multifamily, hotel, and office component. And it'd be one of the larger things that impact our skyline. Next is the Crew Stadium complex. So we were successful in saving the Crew, which is fantastic. The Crew is going to be relocating from another location in Columbus to in the Arena District, which will create a really fun area because they'll have both the Crew, the Columbus Clippers, as well as the Blue Jackets. This will be a mixed-use complex. It'll have both multifamily, retail, and also 120,000 square foot office building. We think that this is going to be one of the more exciting developments that's going to happen to Columbus. So that is under construction as it sits right now. If you drive by, you can actually see the steel going up, and the Crew is anticipated to have their home opener next spring. The hotel expansion with Hilton, that's exciting, and while it's not office, it will change the skyline at Columbus and also give us more opportunity to host conventions and win more travel business, which is really important in stimulating the economy. The next is the Cover My Meds headquarters. Cover My Meds was a startup unicorn that McKesson purchased for over $1 billion. They have started, they're under construction on a 240,000 square foot building, and with the idea to build another 240,000 square foot building. That's right in the fringe of downtown in Franklinton. They anticipate moving into their 240,000 square feet in April, which is exciting because it also shows you their confidence and thoughts on the way they think about working. But that's going to be a super fun, really, I think, just noteworthy thing to point to about, one, our tech talent, also the opportunity to attract investment from a company like McKesson into a region, and then to have that type of physical investment of a $240 million campus on the fringe of downtown is just really, it's great to see. Gravity 2.0. So Gravity, the first Gravity development was built right outside Columbus. It was very unique in its style, again, having retail, apartments, and then also office. The first phase of that is almost fully leased. The apartments have been very well received, and they're underway on the next phase of Gravity 2.0. And then I'd like to call out Grandview Yard, mostly because it's a good example of this kind of this midtown experience. So it's on the fringe of downtown, does offer opportunity for parking. It's anchored by Nationwide Insurance, and then it's being constructed by NRI, which is Nationwide's development arm. This has been a great example of, I think, how you can do mixed-use development. It's been probably almost 10 years in the making, but probably one of our more successful in Central Ohio. So talk about like market demand. So what's driving demand in Columbus, Ohio as it relates to office space? We talked about the technology sector that continues to grow. We've seen a lot of startups, which has been great. Also healthcare too. So we're seeing some, especially like healthcare data tech. Healthcare would be, so probably a marriage of the two would be the McKesson piece, which is both technology and both healthcare. Certainly financial services. We have a great financial services sector here. We have a huge hub of insurance, a huge hub of banking. Huntington National Bank is located in Columbus, and they're a very large regional bank. And then I spoke earlier about logistics. Our location in Columbus is central to the United States. We can hit about 65% of the population within a 12-hour drive. Because of that, we have a really, really strong logistics sector that does actually drive our office market, because you see them, we have actually pretty big depth in just logistics. And then service firms. We're seeing new service firms coming into the market to service retail, healthcare, and technology. So that's been fantastic. So you've seen expansions of companies like ourselves, Accenture, others, Deloitte. They're coming in to expand, their service offerings in a growing market like Columbus. Here for the economic outlook. I mean, there's a lot of words on this page. I would just say, like, right now, I want to almost shift to the last page to kind of give you my overall summary. I think as we look, I still feel like as COVID is something that's happening in a period of time. Unfortunately, it's not, we're not rebounding as quickly as we're seeing and with our colleagues in Shanghai with David and things coming back as quickly as that. But as it relates to like the overall economy in Columbus, I think for me, it's really this page right here, the bottom line. We are tremendously diversified. So if you take a look at, in fact, we are the state capital. We have a excellent depth in logistics, financial services. We're a hub for JP Morgan. We have higher education. That diversification will really provide a lot of stability to our overall office market, and will continue to attract investment. We're already seeing tremendous investment in the multifamily sector and tremendous investment in logistics. We just started seeing pre-COVID a lot of interest from foreign capital into our office. I expect that trend to continue because of how much talent we're creating here in Columbus. So if I think about what makes Columbus unique and how I would define the strengths of the office market, it would be diversification. I think also it's location, and then the fact it's a state capital, and the fact that it's a talent creator with those 52 higher ed education universities that are just kind of pumping out talent year over year. And then one of the things that you'll see, we have Brendan and other folks from JobsOhio here. What I think Columbus does better than really anybody is just really a great depth of public-private partnerships. So we have the ability to get really difficult things done. An example being that saving the crew, which is very complicated. a little political, but everybody leaned in and found a way to do it. And you can see it'll result in, you know, hundreds of millions of dollars investments and probably thousands of jobs created. So to me, those are the things that make, you know, Columbus different, and also why I have a lot of confidence in the overall office market.
Thank you very much, Mike.
Yeah.
So Dave and Mike, thank you for the overview of Shanghai and Columbus, and for generously making Columbus look like it's on par with Shanghai. So that was great. Next, I'd like to give the floor to Brendan Murray and do a little dive into the SiteOhio program. Brendan?
Oh, I'm on. Okay. I think it just popped up. So just this morning, we wanted to go over, we have a program to introduce that really we've been working on in the last 3 or 4 years called SiteOhio. And what it does is it allows us to actively invest in new development sites throughout the state. So I'll go through kind of where we were to start and kind of why this initiative got kicked off, and then you know, what we're doing to work on this, and then kind of where we see this going forward. So a really quick overview for JobsOhio. So these are some of the services that we work with, you know, very closely with commercial real estate brokerages and other stakeholders throughout the state to attract businesses and new investment from a job creation and capital investment standpoint. So we work on site selection services, working on business development incentives from a tax credit, grant and loan perspective. Workforce recruitment, as Michael said, there's 52 universities in the greater Columbus area. Throughout the state of Ohio in general, there's 200 plus universities, community colleges, and technical schools. So working to be a liaison between the business community and those educational institutions. And then the public-private partnerships, so streamlining permitting processes, really helping companies to navigate the government and other approval processes that come with getting sites online. So really, when we talk about this, we break it into these 3 buckets. Like I said, it's site selection services, working on incentive packages and really value add investing to drive investment into the state, and then talent acquisition services. So that's the matchmaking between the educational systems and the companies that are coming in. So SiteOhio is a program that we started about 3 or 4 years ago, and really, you know, kind of talking about the history of it. It started because we didn't really have a lot of information on our inventory, and people would come to look at sites and there'd be surprises in terms of utilities and encumbrances and, you know, phase 1s and phase 2s that maybe weren't complete. And so what we wanted to do is make sure that we had a database of sites that, you know, as we're working with the stakeholders throughout the state, that as companies are looking, we have all the information on the sites. You know, we have a deep knowledge of the inventory. We're strengthening those relationships both with, you know, utility providers and all the people that bring these sites to market, and making sure that as companies are looking for new investment, we have sites that we know are ready to go and that we've put through our own vetting process. And so I'll talk a little bit more about that as well. But the goals as we stood this up was really to get that education, the understanding of, you know, what is our inventory? What does it look like? What do we need in order to get these sites, you know, up and ready and up and online and ready for an investment? And so understanding their strengths and weaknesses and kind of identifying that, knowing, you know, where the utilities are, where the easements are, where we are within all of the permitting processes, and how can we as a state actively work with the stakeholders to bring more sites to market. So there's a big piece in marketing that I'll show you and how we promote these sites as well. And these are the stakeholders that we work with. So you'll see there are a lot of utility providers, state agencies, you know, construction companies are in there for some, the railroad providers, all those people that bring sites, and a lot of them had their own site readiness program, but we wanted to do one that was kind of state branded and bringing all of them together in order to kind of have a unified effort from a state perspective. So these are the people that we work with as well. You know, One Columbus handles the Columbus office here and was one of our regional partners that we work really closely with. One thing that we talk about a lot at JobsOhio and what we can control with our clients is really we call it speed, cost, risk, or speed, risk, and money is as it's said here. So how are we making sure that companies that are looking at making new investments or developers that are looking at new sites, how can we get them in the market quicker, reduce their risk, and reduce their cost? And so you'll see some of the ways that we look at this and how this program was stood up with these things in mind is really getting those permitting done so that they can enter the market quicker. You know, the money from missed construction days and not knowing what's on the site from a wetlands and flood perspective, you know, how are we making sure that those kind of hindrances are taken away? And so that's a big part of this program as well. Some of the incompatible uses, just so you're familiar, you know, prisons, schools, daycares, churches. Really, this program is aligned for manufacturing, heavy distribution, you know, big capital investment projects, and not necessarily the ones that we would call population driven. So, you know, a daycare center is just going to be driven by the people that are living there. We're trying to get these sites ready for larger scale investments and things that serve kind of the greater Midwest or the greater US as a whole. And this is kind of the continuum of our SiteOhio program, and the people who work on this. You know, it starts with kind of community readiness and helping the individual locals and regional partners that we have understand what their inventory is, understand, you know, where those shortcomings are and how we can help them get there. Real estate development and working with those stakeholders as well, and then getting down to the site selection process. So obviously you guys are all familiar with that part of it, but that's kind of the end of the spectrum as we work through, you know, the education and all of those pieces as well in getting these sites up and running. So some of the things that we work with that are the main drivers are obviously the utility capacities and making sure that there's sufficient utilities at each of our sites that we've authenticated. So this is one of the things that we go over with our community partners to make sure that they have an understanding of everything that's there. And then what due diligence means. So to us is that all of these will be done, all of these, you know, the phase ones, the phase twos, wetlands, all of those kinds of things have been written off by the state and national governments if needed in order to make sure that the site is free and clear of, you know, anything that might pop up. And so we actively invest with the sites that are submitted and make sure that these are all completed prior to authenticating one of our sites. So where are we right now? So we have evaluated 437 sites that are either in our pipeline that we've looked at or evaluated. Like I said, this has been going on for 4 years about at this point. So we've had 51 site visits across our authenticated sites. We are up to 22. We've added 2 new ones here in 2020, and we have 10 sites pending. If they're pending, you know, there could be certain utilities that need to be brought to the site, certain studies that need to be done. But we anticipate if a site is pending that it could be coming to market here in the next 18 to 24 months. So, you know, we'll be able to send updates as those come to market. So on the portion of our website, as we talk through kind of the marketing piece that was on the kind of education, identification, and marketing slide, this is how we're marketing them. So find your next location. You know, we have a very stringent site authentication program. As you'll see, it's the most detailed of any other state in the country to make sure that we've got, you know, everything aligned prior to development. I don't know what, there we go. So this is what it looks like. We have our Zoom prospector database, so you can look for all kinds of buildings and sites throughout the state of Ohio that are submitted here. Our authenticated sites are obviously the ones that are prominently featured here. Construction ready day one. We've got our own website here, jobsohio.com/site selection, if you'd like to see all of the sites that we have. And then each one has their own individual landing pages. So you'll see this means that it's close to a highway. There's railroad on site with a lot of them, you know, proximity to an airport, because that's important as well. And then just kind of the quick hits. So here are the electricity and utility capacities, you know, the total acres and all of that. And then if you click into these sites, each one, I won't play the drone videos for you, but they are narrated by Columbus legend, Jungle Jack Hanna. And they give the full overview of the site, drone videos, all that good stuff, so that you can see, you know, not just from the ground, you can see kind of the aerial shots as well. And then within there, they're very detailed maps. So you can see where those utilities come from, where does the railway come in, how close are you to the highway, all of the things that are important and that we've seen are the key drivers for companies that are looking at these kinds of investments. We're making sure that those maps are in those videos and also on the flyers as well. So an example of the flyers that we have, they're just very detailed with, again, all of the pertinent information that we generally find that people are looking at when they're looking at development. So again, just continuing to promote these sites the best that we can. Aerial maps, those kinds of things. As Michael said, this is kind of the proximity of where we are location-wise, which provides us a great advantage. So we play that up as much as we can with a lot of our sites. And then the last piece of this is really just our revitalization and redevelopment. So that was kind of our SiteOhio program, which deals with new land sites and bringing sites to market for new development. The other side of our SiteOhio program is looking at areas that need new development and new buildings that could be maybe repurposed or that could be actively invested in to bring back to life for different uses. So if it was maybe a dirtier use and there's a food company that's looking at it, how are we making sure that we're actively investing with them in those buildings to bring them to market and to increase our inventory of buildings that we have, not just new buildings as well. And so, since we've launched this program, again, it's been probably 3 or 4 years since we started this. But you'll see there's a lot of money that's been invested through our different grant programs. And if you would like more information on that, we can circulate an overview of our incentives too. But you'll see there's a lot of investment that's gone on both with our site preparation projects and our revitalization grants. So you can see that, just over here in the last, since our inception here, 281 million has been invested through both of these. So it's where we're really putting a lot of money into, making sure that we've got buildings and sites that are ready for redevelopment. And then kind of as the last page here is just the funding overview. You can kind of see we're going throughout the entire state. There's a ton of different sites that we're looking at and actively investing in. So we've got 29 projects. This amount of money, 68 million, has been committed so far to a lot of this. And then these are a lot of the sites that we've been working on kind of throughout the state. You'll see this is broke out into our 6 different regions with our regional partners. So you can see each region has their own development that's gone in there as well. And so really, in kind of summary here, the purpose is just to show, in addition to the market and how, Michael went over kind of what was going on in Columbus and everything, this is kind of how we're working as a state to actively be involved in the development process. And, like I said, this has been going on for the last 4 years, but it's something that we're putting a lot of money and a lot of focus into going forward. And so you'll see updates from myself or from our international team, hopefully regularly, that'll show these new sites coming online and, new investments that we have. So just wanted to give that overview this morning and really happy to be involved. And if you have any questions, just please let us know. We're happy to answer.
Thanks a lot, Brendan. And it's great to see from your presentation how much investment the state of Ohio has put into these sites, that it's ultimately saving businesses that money from having to do it themselves. So it's a great way to attract folks here. We do have a couple questions, and then before we go into networking, for those who have time to stick around. First one for David. What's the latest in terms of Chinese investment, commercial and residential, in the U.S.? We hear that it has dropped significantly. What's the word on the street in Shanghai?
Yeah, I mean, I think there was a big push 4 or 5 years ago, outbound Chinese investment, and I don't think it wasn't just solely in commercial real estate, but you obviously saw a lot of, in the banking, M&A investment field, you saw a lot of that. I mean, with Wanda purchasing ANC, and what have you, but. I think the outbound investment is, has been tampered down, and over the last few years that has dried up quite a bit. And I think part of that is due to maybe an over demand and an over outflow of capital that you saw 3-4 years ago, and also I think very, very highly tied to the central government and views on capital outflows, but it's definitely tampered down. In terms of investment, there's still obviously a lot of activity going on. I think less so in the States and more so in the region. So there's still quite a lot of activity investment from mainland China into Singapore and Malaysia, kind of Asia Pacific, less so in the U.S. right now, but still there's still a lot of development and money in residentials and, this stuff like that. But specifics, I can definitely ask our capital markets team, our CB research team. We publish quite a lot of stuff, and be happy to send over some research later.
Great, thanks, Dave. Next question for Michael. Why is there a concentration of millennials in Columbus?
So I think it comes, so a couple of things. So I'll give you my opinion on this. So I think we've done a really good job of, creating the talent. So we talked about the universities, and historically we have always had these schools here and produced a lot of this talent, but we were losing them to other markets, right? So like the classic brain drain. But I think the region has done a great job in creating an environment that is very compelling for those folks that graduate college to stay. And I think that's both in like the live, work, play. So I think it starts with the jobs. So having the employers, ready to hire those folks and bringing in, new companies to hire them as well. But then also, creating a more exciting and more diverse, downtown environment as well too. So, I think if you were to spend time in the short north, it would rival a lot of other cities for that experience that you could have. And I think, there's things like cost of living that plays into it as well too, as some of the larger markets got to be that much more expensive. That new employee, their dollar was able to go that much farther, but they were still able to have a good, one, quality of life, but then a good overall experience in a place like Columbus.
All right, thanks. Brendan, have you seen more use of the SiteOhio program since travel has become difficult?
I think we've seen a lot more companies asking to do the front end searches for us and trying to do a lot more of this remotely. We're still seeing a handful of companies that are traveling. Granted, it's a lot of kind of more Midwest, East Coast people that are coming and looking at sites because they can get in the car and make that trip. They don't have to get in an airport or anything to get here. But I think we're trying to get creative. I think those drone videos are definitely helpful because it allows people to see the sites without having to actually be here. We're working through, especially with building visits in our existing buildings, doing, how are we going to do maybe video tours of those or kind of the remote, tours that we can do. But yeah, we are seeing still some activity. I mean, it's definitely dropped in terms of, people looking at our sites in Ohio, but I think that it's a lot more exploratory than it is kind of the meat and bones of the conversation that we're having. It's a lot of kind of front end work and kind of due diligence right now. So it's a lot of that kind of research.
Got it. Thanks. And another question for David. Do you see a trend towards working at home in Shanghai? It sounds like China went back to normal a lot faster than the U.S. did, so it looks like it didn't quite kill the headquarters office environment the way it's going here.
Yeah, I think as I said earlier, the whole COVID-19 work from home, that's really the mid to longer term impact on office space, and again, office space and where you put that office is really a function of headcount. How many people do you have in that, and how to use that space? Does everyone have a fixed desk? Do they not? Are they working from home? But yeah, I mean, within what we call workplace strategy or workplace solutions, there's been a trend over the last 3 or 4 years of companies and employers to try to provide a much more flexible workspace. So instead of a 1980s type setting where you walk into a dingy office and everyone has cubicles, the typical office space movie, you walk into quintessential WeWork or the quintessential creative space whereby there's different colors and spaces and there's a lot different energy level. But with COVID-19, that has forced a lot of occupiers to work from home. And I think you guys probably feel it more in the States now than we did in China. But yeah, it's forced individuals and companies to work from home for that certain period of time. and individuals, key decision makers for firms that may have been a bit more traditional in thoughts that, you know, everyone should have a fixed desk and a much more stringent thought. We're forced to work from home and to use Zoom and all these modern technologies that we have. So yeah, I mean, it's definitely having an impact on work from home, but more importantly, I think the impact is more on, you know, how can we better utilize office space, and what is the correct norm. But interesting enough, you know, there's a lot of research and a lot of depth into it, but you know, although people have been, you know, forced to work from home, and companies are rethinking, you know, well, do we really need that much office space for our staff? On the reverse spectrum of it, and this is really from our banking clients, banking insurance clients, you know, there's strict requests to have social distancing. So on one spectrum, you have people saying, well, you know, we can work from home and less assigned seating. On the other spectrum, you say, well, per capita per person within the space that we occupy today, we need social distancing, so we need more space. And you know, I think there's not one size fits all, but that's really the future of office space, is what is the correct you know, business nature, what is the correct layout for the operations, and more importantly too, from a corporate standpoint, what type of liabilities and requirements do companies need to provide? You know, some of our companies, such as banking and finance, are saying, well, look, if we're asking our staff to work from home, you know, in terms of benefits, what should we be providing to our staff? Should we be paying their power? If they fall down at home and they hurt themselves, is that our liability or is that theirs? From an IT data protection standpoint, how secure are the networks? So, you know, there's a lot more thinking, I think, that will be put into this, but it's the next few years that this will be developed. Mike, do you have any, this is same for Ohio, but any pointers that you had on this? Because I think it applies to both markets.
Yeah, no, absolutely. I mean, I think one of the more challenging things around this particular topic, excuse me, is that every company is approaching it completely differently. So it's really difficult to spot trends. It has a lot to do with their culture, their leadership, where they're located, what the barriers to entry are. I'll say that I think one of the things that we believe strongly is that why you saw a lot of the big announcements from the tech firms on the coasts and places like in Chicago is that there's just so much friction to get an employee into the office. You know, think about subways, long commutes, all of that stuff, to come into a very impacted office environment, you know, people in masks, all of that stuff. So frankly, it's just easier to make the call to say, just work from home for this period of time. But again, I think the harder part is that real estate has never been more discussed in the C-suite than it is today about what they're going to do, which just means they're doing a really, really deep dive around how they want to utilize their physical footprint. But that's causing a big delay as it relates to transactions. So, you know, again, I think the hard part is that every company's approaching it really differently. But the longer this goes, actually, the more I'm seeing companies say that they believe in the physical footprint. So, not a lot of concern for me on the long term.
Great. So I'd like to jump into one networking session. We'll split up basically half and half, and just to 抛砖引玉, as they say in Chinese, to throw out a brick and try to bring in jade, that is, start a conversation.